Hey everyone, LJ Aguinaga here with LJ Realties. In this video, I'm breaking down the Q1 2026 Montreal real estate market. We'll go through what actually happened in the first quarter of the year, what the numbers are telling us beneath the surface, and most importantly, what this means for you, whether you're a buyer, a seller, or an investor. As always, this is data-driven, no hype, just boots on the ground insight from the Montreal market. Let's get into it. Let's start with the Greater Montreal area overall. In Q1 2026, total residential sales came in at 11,300. That's down 4% compared to Q1 2025. New listings jumped 11% to 18,300, and active listings climbed 10%. So on the surface, it might look like the market is softening. More supply, fewer sales, but here's what you need to understand. Prices are still rising. The median price for a single-family home is now $640,000, up 7% year over year. Condos are at $425,000, up 1%, and Plexes hit $865,000, up 8%. On top of that, days on market dropped across the board. Single-family homes are now selling in 38 days, down 10 days, condos at 54 days, down 3 days, and Plexes at 53 days, down 18 days. That last number is the one I want you to sit with. Plexes are selling 18 days faster than they were a year ago. That tells you exactly where investor demand is going. This is not a slow market, it's a selective market. Well-priced properties in the right categories are moving. The ones sitting are the outliers, not the rule. Let me break this down by category for the Montreal metropolitan area because that's where the story really is. Single-family homes, sales were down 3% to 5,770, but median price is up 7% at $640,000. Active listings are up 3%. But days on market dropped by 10 days. This segment remains firm. Family buyers are still active. Good school zones and commuter-friendly corridors are holding up extremely well. Condos. Sales dropped 6% to 4,481. The median price is essentially flat, up just 1% at $425,000. Active listings surged 19%. This is the segment where buyers have the most leverage right now. More choice, more time to negotiate. If you're a condo seller, pricing needs to be sharp. Overpriced units are sitting. Correctly priced units are still moving. Now, Plexes. This is the highlight of Q1 2026. Sales were up 3%, median price is up 8% to $865,000. Days on market is down 18 days. That is an 18-day reduction in selling time year over year. Investors are back, not recklessly, but when a well-priced Plex hits the market with solid fundamentals, it moves fast. If you own a Plex and you're thinking about selling, now is the time to have that conversation. Now, let me give you the geographic breakdown because the story is very different depending on where you are. Starting with sales by region, year over year. The South Shore held flat at 0% change. The island of Montreal and Saint-Jean-sur-Richelieu were each down 3%. The North Shore and Vaudreuil-Soulanges both down 6%, and Laval down 8% in transaction volume. But here's where it gets interesting. When you look at median prices, the picture is completely different. Saint-Jean-sur-Richelieu saw the strongest home price growth of any region, up 9% to $580,000. Laval saw home prices rise 7% to $635,000. Condos up 4%, Plexes up significantly, and Laval continues to be a deeply undersupplied seller's market across all three property types. The island of Montreal saw home prices climb 7% to $815,000. Condos held flat at $465,000, and Plexes up 6% to $915,000. The South Shore had median home prices up 5% to $640,000, with condos up 2% and Plexes up 16%. Vaudreuil-Soulanges saw homes up 5% at $620,000 and condos up 8%. The pattern is consistent across the metro. Fewer sales, prices holding or rising. That's the hallmark of a constrained market, not a declining one. If I'm calling out two areas to watch closely right now, it's Laval and the South Shore. Both are deep sellers markets. Both are seeing faster sales and rising prices at the same time. Now, let's talk about the fundamentals because this is where the long-term thesis lives. The vacancy rate in Montreal sits at 2.9%. Average rents are now $1,346, up 14% from last year. That kind of rent growth directly supports Plex values. It also reminds buyers who are on the fence that renting is getting more expensive, not less. On the mortgage side, The Q1 2026 data isn't fully in yet, but we know that rates have been trending lower than a year ago. The one-year rate was at 7.84% in Q1 2025. Rates have come down meaningfully since. That's putting more buyers back in the market, especially at the entry level and mid-range segments. Now, it's important to know that most recently we've seen rates start to trickle up a little bit again. It hasn't been a crazy increase, but we are seeing them start to come back up. It's important to see where this is going to go in the near future due to all the uncertainty due to the war with Iran, due to all the forces that we're seeing in the economy right now, how this is actually going to play out and how it's going to impact interest rates over Q2 and Q3. But for now, this is what we've been seeing. Coming back, housing starts remain constrained. Single family, condo, and rental construction are simply not keeping pace with demand. That's not a short-term problem, that's a structural issue that continues to support prices going forward. Now, what does this mean for buyers, sellers, and investors? Let me give you my read on each group. If you're a buyer, this is not a moment to wait out. Prices are not correcting. The segments where you have the most leverage right now are condos, particularly in areas where inventory has risen. But in single family and plexes, you need to be ready to move. Properties with good fundamentals are not sitting long. If you're a seller, strategy matters more than ever. A well-prepared, correctly priced listing in the right segment is still selling in under 40 days. What you need is a broker who understands pricing to the data, not just the gut feeling. If you want to know exactly what your property is worth right now, book a call. The link is down below. If you're an investor, Plexes are the story of 2026. Rent growth is strong for units under $2,000. Inventory is low, days on market are falling. If you've been waiting for a signal, this is it. But be disciplined on price. Bad deals don't work. Good deals with real cash flow are moving faster than they were a year ago. My take going into Q2. Here's how I see the rest of 2026 playing out. Transaction volume should gradually improve as rates continue to stabilize. Price growth in single family and plexes will remain solid. Condos will stay flat to modest unless something shifts in the rate environment, and investors will keep pushing into the Plex market, which will mean well-positioned sellers will have strong options. The word I keep coming back to for this market is intentional. Buyers are more intentional. Investors are more disciplined. Sellers need to be more strategic. The days of anything selling at any price are behind us, but the fundamentals of this market remain strong. If you're thinking about making a move in 2026 and you want a strategy built on real data, reach out. The link to book a call with me is in the description down below. If this video was useful, hit the like, subscribe, and I'll see you in the next market update.